This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia will make a deep cut to its output in July in addition to a broader OPEC Plus deal to limit supply to the end of 2024 as the group faces flagging oil prices. OPEC Plus already had in place oil output cuts of 3.66 million barrels per day, amounting to 3.6% of global demand. The figure comprises a 2 million barrels of oil per day cut agreed last year from August 2022 production levels, and a further 1.66 MLNBPD of voluntary cuts from 9 OPEC Plus countries. OPEC Plus did not increase the 2023 production cuts.
Saudi Arabia has crafted a complex OPEC Plus deal with a view to punishing investors that have bet on falling oil prices but could inadvertently lend long-term support to the rival U.S. energy industry, OPEC Plus insiders and market watchers said. On Sunday, Saudi Arabia pledged to cut its oil output by 1 million barrel per day, BPD, or 10%, in July on top of existing output cuts from OPEC and its allies. With the new Saudi reduction, the group has agreed to take some 4.6 million barrels of oil per day off the market in July, equivalent to 4.6% of global demand of 100 million barrels of oil per day. OPEC Plus also agreed on Sunday to extend the group's existing supply cuts of 3.66 million barrels of oil per day into 2024.
Moving on to the top news in the energy sector.
U.S. crude oil exports, already running close to a record level hit in March, should get a further boost next month from deep production cuts in Saudi Arabia, analysts said on Monday, noting that this will also further deplete U.S. crude inventories, which have been hovering near historic lows. Saudi Arabia, de facto leader of oil producer group OPEC, said on Sunday it would drop its production by about 10%, or 1 million barrels per day, BPD, to 9 million barrels of oil per day in July. It said it might sustain the cut to support oil prices that have dropped due to worries about a potential economic recession. The move opens the door for modest gains in US and Latin American shipments to Europe and Asia, analysts said, and gives US producers new confidence that Saudi Arabia will provide a price floor should a recession clip demand.
France is rolling out the red carpet to EV battery makers, offering generous subsidies thanks to a relaxation of EU state aid rules for green energy projects, along with some personal lobbying by President Emmanuel Macron. For French President Emmanuel Macron, it was a light bulb moment. Results don't just fall from the sky, Macron told Reuters in Dunkirk. It's in line with what we've been doing for 6 years. France is adapting to the world. Automakers are racing to stay ahead of rivals by producing cleaner vehicles, securing greater control over their supply chains and bringing plants making EV batteries, an industry dominated by Chinese, South Korean and Japanese firms, closer to their manufacturing sites. Next, we have the top news in metal markets. Iron ore futures rose on Tuesday to their highest levels in about 7 weeks, as hopes grew for more property sector-focused stimulus measures in top steel producer China. Steel benchmarks and other steelmaking ingredients in China also advanced as real estate stocks listed in Hong Kong jumped nearly 8% on hopes that Beijing would soon roll out supportive measures to bolster the embattled property sector. The most traded September iron ore on China's Dalian Commodity Exchange ended morning trading 3.1% higher at 780 yuan, $109.71, a ton, just below the session high of 780 yuan and 50 fen, its strongest since April 19.
Copper prices came under pressure on Monday from worries about demand, particularly in top consumer China, and a stronger dollar which makes metals priced in the US currency more expensive for holders of others. However, copper recovered after the New York Open as the dollar retreated in afternoon trade after the release of weak US economic data, traders said. Benchmark copper prices on the London Metal Exchange, LME, had gained 1.5% to $8,359 a ton by 16:07 GMT. Prices of the metal used in the power and construction industries have dropped 10% since the middle of April.
We will now look at the top news in the agricultural sector.
The European Commission said on Monday it was extending until September 15 an arrangement whereby 5 of Ukraine's EU neighbors can restrict imports of Ukrainian grain. The EU on May 2 allowed the 5 countries, Bulgaria, Hungary, Poland, Romania and Slovakia, to ban domestic sales of Ukrainian wheat, maize, rapeseed and sunflower seeds while allowing transit through them for export elsewhere, including to other EU countries. Those restrictions, designed to ease excess supply, were due to expire on Monday. The 5 countries had sought an extension, complaining cheaper Ukrainian grain was making domestic production unprofitable. Ukraine lobbied for them to be lifted.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.